Roku just reported fourth quarter and full year earnings for 2021, and the stock got absolutely destroyed. As of Friday's close, Roku's stock price was $112.46 for a market cap of $15.1 billion. In this video, I'm first going to go over Roku's Q4 earnings results. Second, I'm going to go over 4 reasons why the stock got crushed. And finally, I'm going to go over my game plan for investing in Roku. All this right after. I am not a financial advisor. This video is for entertainment purposes only. Learn to invest like a wolf at your own risk. What's up, everyone? Welcome back to my channel, Wolves of Investing. My name is Donnie Nguyen and I'm the founder of Wolves of Investing. If you're new, I talk about growth stocks, SPACs, Bitcoin, options, and anything on my mind related to investing. If you want to learn how to achieve financial freedom through investing, be sure to click on that subscribe button and notification bell if you haven't yet. And please remember to drop a like on this video if you enjoy it, as it truly helps out the channel. So without further ado, let's get right into it. Roku remains the #1 TV streaming platform in the US, Canada, and Mexico by hours streamed. In the fourth quarter of 2021, active accounts grew 17% year over year to 60.1 million. Streaming hours grew 15% year over year to 19.5 billion. Average revenue per user, or ARPU, grew 43% year over year to $41.03. Platform revenue grew 49% year over year to $703.6 million. Player revenue decreased 9% year over year to $161.7 million. Total revenue grew 33% year over year to $865.3 million. Platform gross profit grew 41% year over year to $425.6 million. Player gross profit came in at a loss of $45.9 million. Total gross profit grew 24% year over year to $379.6 million. Platform gross margin was 60.5% for a decrease of 3.4 percentage points year over year. Player gross margin was negative 28.4% for a decrease of 31 percentage points year over year. And total gross margin was 43.9% for a decrease of 3.1 percentage points year over year. Total operating expenses grew 49% year over year, with a huge 70% increase in sales and marketing. Income from operations decreased 67% year over year to $21.4 million. Adjusted EBITDA decreased 24% year over year to $86.7 million. Adjusted EBITDA margin was 10% for a decrease of 7.4 percentage points year over year. For the full year 2021, total net revenue increased 55% to $2.765 billion. Platform revenue increased 80% to $2.285 billion. Gross profit increased 74% to $1.409 billion. So why did Roku stock tank? Of course, we're in a macro environment that's extremely bad for growth stocks, which I've mentioned in previous videos. There's fear of the Fed raising rates and other market fears out there. Obviously, it's not January 2021 anymore. But aside from the macro environment, these are the Roku specific results that the market did not like. First, Roku missed Wall Street's revenue estimates. According to Estimize, Wall Street forecasted $894 million, which Roku missed by 3.2%. Second, supply chain issues continue to impact Roku. Getting Roku's OS into the homes of consumers requires a healthy supply chain from their smart TV manufacturing partners. And their streaming devices require a good supply of computer chips. And as we all know, there's still a global chip shortage. As we can see from their results, Roku lost money on their player for the third quarter in a row. So they're basically giving out their streaming players for free. The third biggest reason why Roku stock tanked was their guidance. According to Yahoo Finance, Wall Street was forecasting $748.5 million in revenues in Q1, whereas Roku is guiding for $720 million. And the fourth reason why Roku stock tanked is the massive spending that Roku mentioned on its conference call. They expect to ramp up spending in employee growth, the Roku OS, the Roku channel, and other areas of their business. Because of this ramp up in investments, Roku is guiding for a flat EBITDA growth this year, although they are still guiding for revenue growth of around 35% for the full year. So what is my game plan? So as you all know, if you've been following me for a while, I am a huge Roku bull and been investing in Roku since 2017, which is when they IPO'd. Roku's definitely got some headwinds in its business, with supply chain issues, people spending less time on TV as pandemic lockdowns have eased, an increased spending cycle, and the macro environment, inflation, and the fear of Fed raising rates. For me, as a long-term investor, I'm just going to monitor how Roku does with these business headwinds, but pretty much ignore the macro environment. My investment time horizon is 5 to 10 years or more. And I don't think that the macro environment will last that long. I strongly believe in the story that all TV ad dollars are going to streaming and that Roku is in the best position to capitalize on this transition. As long as Roku keeps growing active accounts, ARPU, and revenues, and the stock price doesn't get out of control like it did in 2021, I plan to keep dollar cost averaging in. If the stock price gets low enough, I might even sell cash secured puts on Roku. And if you want to know more about cash secured puts, be sure to watch this video that I made about the basics of cash secured puts. Alright, so thank you for making it to the end of my video. If you want to get more insights into my portfolios, or if you want to just support the channel, be sure to check out my Patreon. A link is in the video description. And as always, a huge thank you to the patrons that have already joined. And also, be sure to check out my free Discord to talk about stocks, SPACs, Bitcoin, and other investments with other members of the Wolves of Investing community. A link is also in the video description. All right, so let me know what you think about Roku. Drop me a line in the comments. Be sure to leave a like on this video before leaving. Thanks for watching, and I will see you next time.